The World Bank's GNI assessment and ranking comes barely a month after government announced in the 2026-2027 budget speech that Uganda had crossed the lower middle income threshold, with gross national income per capita rising to $1,389.
So GNI per capita looks at the income that has been earned by residents of the country within, for example, this financial year, which we are talking about. So it means if you look at this
so the computation is from July to July.
It is a financial year. That's what we are looking at, financial year. So if we look at that, in terms of gross national income, we are looking at total income received by Ugandans, both here and abroad, in this kind of, in a given period which we are looking at.
But what does this divergence between the government assessment and the World Bank's classification mean for Uganda's economy, investment prospects, and development ambitions?
So by considering you as a lower income country, you are going to miss out on what you call some concessional loans. Some development assistance, you may not qualify for it. Because now people start to get worried whether you have capacity. Have you heard of appraisal? That when you want to get a loan, the institution will come to you and have to appraise, and when they come up, there is already a trusted statistic.
It's like some form of a credit score.
Absolutely. Where do you fall?
The World Bank uses its Atlas method to determine country income classifications, a methodology that smooths exchange rate fluctuations and relies on internationally comparable data when calculating gross national income per capita.
You realize we have big potential, and the government is actually putting some efforts to be able to take advantage of these opportunities and be able to unleash the potential. Tourism potential, you have looked at the 10 for growth strategy.
Minerals,
so
technology.
If we can be able to take advantage of these ATMs, agro-industrialization, we focus on value addition, we intensify it. We just be able to position ourselves in terms of tourism, bring in more money coming from tourists, and then we'll be able to take advantage of the oil that is coming through. You would expect that we can be able to move into that level.
Across East Africa, Kenya and Tanzania remain lower middle income economies, while Uganda and Rwanda continue to be classified as low income economies.
So if you see Kenya at its level of industrial development, a regional hub, when you see it at that level, and you think that actually you have been judged fairly, you should be at the level of Kenya, then you are not facing reality.
You're right.
You get the point? And
that's a very clear point.
And secondly, I encourage Ugandans also to have an opportunity to move beyond Uganda and see how other countries are doing it.
Dennis Igoa for UBC.